You've probably heard the buzz. China's economy is slowing down. But what do the numbers actually mean? Well, today we're going to dig into what's really driving this change and, more importantly, what it could mean for the whole world, and maybe even for you.
Okay, it all starts with this number right here, 4.8%. This is the single figure that has economists, politicians, you name it, watching very, very closely. So, what is it?
That 4.8% is China's GDP growth for the third quarter. And yeah, that's the slowest pace we've seen from the world's second biggest economy in more than a year. You should think of this less like some boring statistic and more like a warning light flashing on the global economic dashboard. It's a really clear sign that things are decelerating, and that has consequences for everyone.
So let's break down what this snag really looks like, because this isn't just one bad number. It's part of a trend that's got a lot of people concerned.
I mean, just look at the last quarter. The economy was humming along at 5.2% growth. Now it's down to 4.8%. Now that might not sound like a massive drop, but for an economy the size of China's, that's a huge loss of momentum in a pretty short amount of time.
So, the big question is, where's the slowdown coming from? Well, the first big piece of the puzzle is actually happening right inside China.
A bunch of key signs are kind of flashing red here. We're seeing investment in big projects fall. We'll get to that in a sec. The real estate sector, which has been a monster engine for growth, is cooling down. Retail sales are, well, they're sluggish. People just aren't out there spending like they used to. It all points back to this one central problem: domestic demand is weak.
And if you want a number that really drives that investment point home, look at this, negative 0.5%. That's how much fixed asset investment has dropped in the first 9 months of the year. The reason that's so alarming is that it's the first time this number has gone negative since the huge shock of 2020.
And just in case you're not familiar, fixed asset investment is basically how much a country is spending on the big stuff. New factories, machinery, roads, buildings. It's really a bet on the future. So when that number turns negative, it's a huge signal that businesses are getting pretty nervous about where things are headed.
But you know, it's not all about internal problems. There is a massive external force at play here. And that brings us to the squeeze from American tariffs. Yep, the trade dispute led by President Donald Trump's administration is having a real, measurable impact. These tariffs just make Chinese products more expensive for Americans to buy. And that directly hurts China's exports and cools down the overall demand for their goods around the world.
And let me tell you, the tension is running high. China's foreign ministry put out this incredibly blunt warning to the U.S. It just goes to show you, this is way past a simple economic tiff. We're talking about a full-on geopolitical showdown.
Okay, so with all that pressure, you'd probably think the picture is pretty grim. But weirdly enough, the data shows a surprising little twist, a possible ray of hope right in the middle of all this.
So, is it all bad news? Not exactly. There's one area that actually blew past everyone's expectations, and it's a really important one. Just look at this. This is industrial production for September. The experts, the economists, they were forecasting a solid 5% growth. But the actual number, it came in at a whopping 6.5%. That shows that China's factories, the heart of its manufacturing muscle, are still incredibly strong even with all these challenges.
All right, so we've got these conflicting signals, right? Weak demand at home, but surprisingly strong factory output. What does this all mean for the future? To figure that out, we got to zoom out a bit.
This timeline really helps put that 4.8% in context. You can see the absolutely insane peak of 15% growth back in 2007, then the dip during the global financial crisis, the historic crash from COVID, and now today's slowdown. What it tells you is that this is an economy that has seen some incredible highs and weathered some serious storms before.
So the stakes are just incredibly high. Beijing is facing huge pressure to pump more money into the economy to get things going again. And hey, this isn't just China's problem. A long slowdown there could easily send ripples across Asia and Europe, messing with supply chains and markets everywhere. It makes finding some kind of deal with the US absolutely critical, not just for them, but really for the stability of the entire world economy. And that leaves us with one final really important question. As these two economic giants go head-to-head, the outcome isn't just about which one wins. It's about whether the global economic system itself can handle the strain. In this high-stakes battle, you have to ask, is it even possible for the world to win? That is the multi-trillion-dollar question everyone is watching.